All right, so today I wanted to talk about another very important aspect of investing, and that's kind of the misconception, at least amongst some people, not the where the smart money is, but that's the idea that lower prices are a bad thing, right? Now, in reality, lower prices of stocks is only a bad thing in the short run because if you own fundamentally sound businesses in the long run, the prices will go up, right? The problem is that a lot of people that really don't know what they're talking about or just are amateurs or whatever is again they have something they own, the price comes down and they sell, right? But the reality is that again, if you own a fundamentally sound business, then why would you sell, right? Why would you sell? Now, again, if you own a bad business, yeah, it's probably a good idea to sell and move on. But again, if you own a fundamentally sound business, lower prices are a good thing because you can use the lower prices to buy more shares at a discount. Again, it's how the saying goes is that the stock market's the only area where prices can go on sale or things can go on sale and people are mad about it or don't buy, right? So there is a very important aspect though too is that you have when prices come down you have to make sure that nothing fundamental has changed, right? Because if insiders are selling in mass or earnings are going down or they're not making money anymore or they have a scandal or again you name it as far as negative or potential negatives as far as it goes, then okay, yeah, something has changed. But again, if nothing has changed, if companies are still growing earnings at a strong rate, they're returning, their return on equity is good, they don't have excess debt, they're not issuing massive amounts of shares, insiders are buying, or at the very least not selling, then, I mean, there's a lot of other aspects as well, but then you know that it's a good company, right? And you should be buying. Now, again, assuming you're not overweighted, but again, if you take even if you take Bitcoin for example, again, Bitcoin's different than a stock, right? People love to compare it to stocks, but it's not the same thing. Bitcoin's came down a lot this year, but has anything fundamental changed about it? Like, no, nothing fundamental has changed. The adoption continues to go up. The Lightning Network continues to come more online. Whales are still buying. Like, again, if the smart money is still buying, right? This has clearly been like as far in my opinion, right? The sell-off in Bitcoin has been entirely driven by the sell-off in the stock market, right? And the fears of a looming recession, I think, and rates going up. But in reality, nothing fundamental has changed, right? Now, again, Bitcoin may not have been worth, you know, 85,000 or 69,000 US, at the peak. That may have been a little overdone, but I think that we're far underdone right now, right? Um, I think we've probably seen the bottom. I think that 18,000 US is probably the bottom. In fact, I'd be very surprised if it isn't. And even if it is, again, it just gives us another good buying opportunity, right? So again, like to say, the main point is here is very simple. Lower prices mean gives you an opportunity to buy shares of good companies at a discount, right? But you got to make sure they're good companies, right? Again, just because the prices came down doesn't mean it's a good thing. If it's a good company, it does, right? I mean, if you take Amazon right now, I mean, Amazon's came down a lot this year, year to date. I mean, split adjusted, it peaked at about 169. Even I think it was even a little higher before the year. Let's go back a year. I mean, a year we peaked at about 183, right? So Amazon's down quite a bit. But again, we've dropped down to just over 100. So again, this just gives you and again, in my opinion, Amazon's a good company, right? It gives you an opportunity to buy shares at a discount. But again, does that mean you pile in all your money all at once? Not necessarily. The safer way of doing it typically is dollar cost averaging, right? Now again, if you take shares of, I don't know, ARK, right? This is an ETF, obviously, not a stock, but again, it's down massively, right? It's down massively. It peaked at about 150, I believe. Um, but again, ARK is a ETF that's full of companies that don't make money. There's some that do, but most of them are very speculative companies that don't make money. A lot of them are hemorrhaging. They're losing massive amounts of money, and the only thing that's keeping a lot of them alive is they're issuing a lot of shares, right? So this is the thing you really need to keep an eye out for: is that if a company's came down a lot, but they're alive because they're issuing massive amounts of shares, well, again, probably not a good idea to buy. Now, again, is ARK a terrible investment long term? I don't know, but if you look at the fundamentals say that it's not a good investment long term, right? So again, I just wanted to drive this point home because, I mean, personally, I have one stock. I won't say which one it is, but it's down about 80% from the high. Now, again, it's rebounded decently, probably down about 60% now. Um, and again, I had very little anxiety, very little worry about it because I know in the long run it's gonna go a lot higher, right? And I think I'm gonna make quite a bit of money off it, right? Same goes for Bitcoin too. Bitcoin, people are down. If you bought at the top, you're down 60%. Again, but does that mean that you should be overly worried? No, because if you bought based upon the fundamentals of Bitcoin being the king of cryptocurrencies, being the crypto that has the biggest first mover advantage, it has the advantage of being proof of work, it has the advantage of truly being decentralized, which arguably no other cryptocurrency does. I think there's some that you can argue, but you could probably those are literally ones that you could count on one hand. So again, if you invested in Bitcoin, in my opinion, you have zero reason to sell because nothing fundamental has changed. That is what the people that truly understand will tell you, and that you only sell if something truly fundamental has changed about a business. If nothing truly fundamental changed about a business and you're a long-term investor, then not only do you think that should you think that short-term drops in price are not a bad thing, you'd say they're a good thing because you can get it at a discount, right? If you're a long-term bull on, let's take oil, right? Let's take oil. Um, you don't care if prices come down in the short run, right? Because in the long run they're going to go up. And again, that's another investment that I think is going to be good in the long run, right? Because there's been massive underinvestment, and when there's massive underinvestment but the demand's still there, the price has to go up to keep that equilibrium in balance, right? So again, like I say, I think oil coming, like if we get a recession and oil goes down to in the 60s or the 70s, I think that that's going to be a steal of a deal because in the long run, oil is going to go back into the hundreds. It may even go into the 200s, right? So again, if you're a long-term investor, drops in prices you should be happy about, right? And that's something that intelligent investors need to learn and you need to get comfortable with. The problem is that too many people out there, I think, are speculating, right? They're speculating. And when you're speculating, especially when you really don't know what you're talking about, which, let's face it, is probably 95% of people, me included, to a large degree, right? And probably to me, I probably am included in that, to be fair. Again, you should be happy, right? The way to be successful in the long run is to invest in fundamentally sound businesses, and I think to take very smart, calculated risks. Bitcoin, in my opinion, is the perfect risk because the upside far outweighs the downside, right? The downside is it goes to zero, but the upside is that it goes into the millions, arguably even tens of millions of dollars, right? So, in my opinion, Bitcoin is the perfect risky investment, not ARK or GameStop or any of these other ones, right? Or better yet, Dogecoin and some of these other meme coins, right? Because those ones almost certainly will go to zero in the long run. Bitcoin, again, if the cryptocurrency space survives, Bitcoin will be the one that is always going to be number one. If it doesn't survive, the ones that are going to go to zero first are going to be the Dogecoins of the world, right? So that's the other important aspect of the crypto space. But anyway, I think I made myself pretty clear on this, so I'm going to leave it at that. If you like the video, hit that like and subscribe, and stay tuned for more.